Welcome to Markets Now. I'm Michelle Rook along with Ellen Brugler with Brugler Marketing, a mixed day of trade in both grain and livestock futures. And Ellen, let's talk just a little bit about some of the dynamics in the grain market. We had a lot of back and forth action, a lot of spread trade going on, and some of this was just kind of squaring up over the holiday, right?
Yeah, I think that's a lot of it. You saw the old crop July corn pretty well supported. You saw a little weakness in the new crop bids. But again, we've had a pretty good run up over the last 4 or 5 sessions. If you're a spec trader, you don't want to risk your gains over a 3-day holiday weekend, particularly with a lot of uncertainties in the financials and the outside markets tied to the debt ceiling negotiations and situation in Ukraine and so forth. So it made a little sense to take a little money off the table here if you were long the corn. Obviously, you're short the wheat. The same logic applies in reverse.
Yeah, absolutely. So let's talk about weather. How much risk premium do you think we need to put in this market? Do we have much in the grains right now, especially if we come back on Monday night and we have continued hot weather or dry weather?
I don't think we have a lot of risk premium in there. We may be backing off of the 182, 183 bushel kind of numbers that some people were floating around and putting a little premium in for a lower number, but we're certainly not trading a 175 or something like that. And that is a risk if we get the hot, dry pattern and then it persists. So we got two issues here. We got a short term La Nina to El Nino transition is going to make it typically going to be pretty dry in Iowa and Illinois in June. That doesn't necessarily carry over into July and August, but the market has to deal with what it knows. And so it's going to, if that weather forecast is looking that way, you're going to see some more risk premium put in, I think.
Yeah, we're going to need a good push, though, to get through some of these resistance areas on corn, aren't we?
Yeah, you've got lots of resistance layers technically just because we've just had a big sell off. We did punch through the Bollinger midline this week. We got above the declining regression channel that had been controlling the corn since mid-April. So those are small victories for the bulls, but yeah, there's still retracements and other things that have to be hit. We're not talking major bull market here. We don't have the information to support that yet, either on the crops production side or on the demand side.
Corn not getting any help, though, from export demand. In fact, we're kind of falling back here.
Exports are slow. This is somewhat similar to what we had in 2013. You got the high prices that cure high prices. You lose consumption. You also attract production in other countries to fill in the gap. That's Brazil in this case on the corn side. They've got a they've not exporting not much of their first crop corn, but they're getting some rain in Paraná starting Monday and Tuesday down into Rio Grande do Sul. Those are the not the largest corn production areas for winter corn, but they are going to benefit and make that long-term forecast for production down there look good. Bottom line, we're going to have a lot of competition in the export market for corn in July and August.
Yeah. And let's talk about exports on beans. The fact that Brazil's been undercutting us, is that the main reason why soybeans have been kind of a reluctant follower of the corn rally, or is it because meal keeps making new lows?
Well, you can find lots of people to blame or lots of characters to blame on that one. Soy oil's been under some pressure. The meal
True.
has a head and shoulders top, and it counts to $375 if you take it all the way to completion. There's should be little round number support at $400 there, but again, you take the meal and the oil down, beans about have to go down, and having the export competition and probably having shipped 80% of the beans for the year in the first 6 months of the year doesn't leave you much to work with right here.
So, with the weather situation the way it is, do we get all the acres of soybeans and corn planted, especially up in the north?
I think the trade and ourselves are anticipating some increase in prevented plant acres up north compared to what USDA showed in the March intentions. Obviously, the warmer, drier pattern has helped. A simple little tell is Minnesota was actually ahead of the average pace on spring wheat planting as of last Sunday. Nobody thought that was possible 3 weeks ago. So
No.
the weather has improved a little bit, but again, the price is well below the crop revenue insurance level, and marginal ground may not get planted.
Okay. Wheat again, kind of some spread trade going on there and some positioning or some profit taking by the shorts, especially in HRW or what?
Yeah, it's the spreads were near record wide. The HRW premium to SRW, that's somewhat justified by the production estimates. The HRW looks like it's going to be the smallest crop since 1957. SRW over 400 million bushels, looking pretty good yet. But again, yeah, you get. I think the thing that really made it interesting for HRW was the report of these 7 vessels of imported German and Polish wheat coming into the southeast. That's a bad sign when it pencils to bring in EU wheat into the U.S. and undercut the rail market into the southeast.
Yeah, absolutely. That was pretty negative this week. Cattle market. I had a wild ride today. New contract highs in live and feeder cattle futures initially with that higher cash trade yesterday, set back and then closed back up higher. So do you think that market just kind of keeps going here? It seems like the funds buy on the brakes.
Yeah, I think the funds and the commercial industry are pretty well aware that where we are in the cattle cycle. We've liquidated a lot of cows. We don't have the calves. You're if to the degree that it's raining in the southern plains, you might at some point stop sending the heifers to the feedlots. We don't really have hard evidence of that yet. But again, it's going to take 2 years or more to turn this thing around numbers wise in terms of feedlot population. So uh, you're tending to buy the brakes, thinking that the supplies are going to get tighter for a while longer. The wild card is, will the consumer keep paying up for the beef, both in the domestic market and the export market?
Yeah, and so far it looks like domestically they've been doing that. We have about a 4-to-1 ratio with beef versus pork prices. And let's talk about the hogs because an ugly gap lower opening this morning into new contract lows. What is it going to take to finally turn that market?
Well, it may be just the expiration of the June contract. I think you have to have convergence between the index and the board. The board action today took the board well below the index, and the index has been rising seasonally. It's been going up here for a couple of weeks now. So
Right.
normally that would continue into June and July, and maybe the futures are going to overrun that to the downside and then have to come back. The spec funds are big shorts in hogs, and it can be a very streaky market. We've seen several $10 runs in both directions over the last year in hogs. And it looks like we're just kind of in one of those right now. I call it an escalator move, where you're just moving from one price level to another. But there are up escalators as well as down escalators. One thing I would point out, cold storage report showed that a lot of pork bellies in inventory, 81 million pounds. People aren't eating enough bacon apparently. That's not a record level, but it is the largest since 2014. So we need to see some discount offers on bacon at retail to get things moving here.
Ellen Brugler with Brugler Marketing, and that's Markets Now.